Hello guys, I'm Simo with Investment Research, your equity research analyst. Welcome back to the channel. Today I'm going to walk you through my current portfolio and show you the pairs I'm trading right now. Let me pull up my positions and we'll go through them together. So here's my paper trading account. Account balance is sitting at 8,118, equity at 8,390. Now you can see I've got a realized loss of about $1,380. But I'm up 272 unrealized. The interesting part here isn't just the individual stocks, it's how these positions work together as pairs. Let me start with the first pair. I'm short Tesla and long SoFi. On the Tesla side, I'm short 5 shares with an average entry at $445.55. Right now it's trading at $468, so I'm down about 114 or around 5% on this position. I'm using 4-to-1 leverage here. Look, I know shorting Tesla can be controversial, but hear me out. The valuation at these levels concerns me. We're seeing the competitive landscape in EVs get more intense, and technically we're hitting resistance in this $460 to $470 zone. If we break below $440, I'm looking at the $420 area. My stop is at $475 because I'm not going to let this run too far against me. Now on the other side of this pair, I'm long SoFi. I've got 120 shares bought at $26.83 and it's currently at $30.63. This one's actually working well for me, up 456, about 14%. Also using 4-to-1 leverage. The fintech sector has been showing strength lately, and SoFi's bank charter is really starting to drive better profitability. The student loan business is picking up too. We broke above $28, which was a key resistance level, and that's what got me interested. The reason I pair these together is simple. They're both growth stocks, but with very different risk profiles. If we see a broader tech sell-off or market weakness, Tesla's premium valuation makes it vulnerable. SoFi is in a different phase right now, transitioning from pure growth story into actual profitability. So this pair lets me hedge my tech exposure while still capturing upside in fintech. Next pair is Schwab and First Solar. I'm long Schwab, 150 shares at $27.11. Current price is $26.47, so I'm down 96, about 2.36%. This is my financial services play. Interest rates staying elevated should benefit brokerages like Schwab. They make money on cash sweep balances, and with the Fed holding rates higher for longer, that's a tailwind. Plus, trading volumes have been decent. The stock pulled back recently, which is why I'm underwater, but I see this as a value opportunity in the low to mid-20s. Then I'm short First Solar, 15 shares at $57.12, currently at $55.37. I'm actually up $26 here, about 3%. First Solar has had a massive run this year on the renewable energy theme, but I think we're due for some consolidation. Solar stocks in general look extended, and there's policy uncertainty around subsidies and tariffs. Technically, we're seeing some weakness, and I think there's room to drift lower toward the $50 area. This pair works because I'm playing relative value within industrials and energy adjacent sectors. Schwab gives me exposure to a stable dividend-paying financial that benefits from the current rate environment. First Solar is more speculative, riding on policy and sentiment. If we get risk-off sentiment, First Solar should underperform Schwab on a relative basis. So that's my current book. 2 pairs, 4 positions, and I'm using leverage across all of them at 4-to-1. Total market value across these positions is about $10,600. The strategy here is about correlation and hedging. I'm not just throwing darts at a board. Each long has a corresponding short that either hedges sector risk, market beta, or thematic exposure. Right now, the portfolio is slightly positive unrealized, but I've taken some losses already that are reflected in that realized number. That's part of trading. Not every position works out, and you have to be disciplined with your stops. Going forward, here's what I'm watching. On Tesla, I need to see a break below $440 for this short to really work. If we rally through $475, I'm out. On SoFi, I'm looking to take some profits around $32 to $33. but I'll hold a core position if we stay strong. Schwab, I'm holding through any near-term weakness because I like the setup into year end. And First Solar, if we drop to $50, I'll cover and lock in gains. If you're trading pairs or thinking about it, the key is understanding correlation, sector dynamics, and having a clear thesis for why one stock should outperform or underperform another. It's not just about being long or short, it's about the relationship between the two. Alright, that's my portfolio breakdown for today. Let me know in the comments what you think of these pairs, if you're trading anything similar, or if you have questions about the strategy. Hit that like button if you found this useful, and subscribe if you want more portfolio updates and equity research analysis. I'll see you in the next one.